Time now for the word on Wall Street. Top investors watching your money. Joining me now, former Bank of America Vice Chair Keith Banks. Also with me is Mitch Rochelle and Don Peebles. A lot to talk about with all three of you. Let's start, Mitch, with you. We're looking at futures, obviously. We've got a good boost on the Dow, up 257. Dick's Sporting Goods, this stock, down over 16% this morning. Essentially, their companies, they missed second quarter earnings. The expectations, they cut the annual forecast. They said that there's challenges in the athletic apparel market. Meanwhile, semis remain higher right now. We're watching this group, as you can see on your screen, Micron and all these other names, SanDisk are higher, Nvidia, of course. Now, chip stocks did well on the S&P 500 and the NASDAQ yesterday. We're, of course, worried about AI spending, inflation. This is all coming in as the big one for the week, and this is Nvidia. They're going to be reporting their quarterly numbers after the close tomorrow. Mitch, I want to get your thoughts on what you're seeing in the markets right now.
Well, I think there's a lot of uncertainty in the markets, but there's also not a lot of places for investors to put their money. So I think you're continuing on. Every time there's a dip, there's more money plowing in. Yesterday there was a dip. Today it's up. I think that's sort of the cycle that we're in. Everything's going to be focused on Nvidia on Thursday. But the interesting thing is, it used to be, when I say used to, I'm talking about like 12 months ago, Nvidia was the only name in the space. And now it's broadened out. Who would have thought that SanDisk would have been the high-flying stock that it's become? So I think the market's broadened out, and not every dollar interested in AI is going to Nvidia. So you could see a big beat on Nvidia on Thursday, and then the market for all of the chips, fall as a result.
Right, because they not just they have to beat, but they have to beat.
They have to kill.
They have to kill. They have to do very, very well. Keith, let's talk about yields. We're really watching the bond market this morning, and we've got some key econ data out tomorrow. We're going to be watching, of course, what's happening with PCE. We've got that one, the Fed. Here's the expectations for this one. Let's pull this up on the screen. And there's your 10-year, by the way. But for July PCE, which as of now is the Fed's big inflation report to watch, although there's some debate about that might change. But the rise of 0.1% month to month is the expectation, 3.6% year over year. And then we're also going to get a second quarter GDP read, the second one we're getting. 1.5%, we'll see what we get. So, I mean, there's just a lot happening right now, in particular with the bond market, inflation, and then you're going to hear from Kevin Warsh, of course, on Friday at Jackson Hole.
Look, a lot of moving parts. I think the thing I would look at in addition to PCE is ECI, because that gives you a sense of whether there's, with some inflation in the system, are you at risk of wage price spiral? So far, you're not. I like to look at the two in tandem. But Cheryl, when I look out, I still think there's a lot to. The wall of worry has a few more bricks in it. But I think, when you step back and you ask yourself, what's going to really drive the markets? Number one, I think the economy is still healthy. I think we're going to get nominal GDP in the third and fourth quarters.
What kind of GDP do you think?
I still think between 5 and 6%, with real being 2+% of that. That's going to be enough to continue to drive earnings. I think, look, there is some noise in Q1, Q2 with the mark-to-market stuff. But I think when you get into Q3, Q4, and 27, Q3 and Q4 should still have 20% plus year-over-year growth in earnings. I've seen numbers as high as 410 for 27. Number three, you've got a broadening. Finally, the argument will be, is it sustainable? And was kind of, I think to your point, Mitch, is if you look at the S&P, it's up 12%. Equal-weighted S&P is up 15. Russell and MSCI, emerging markets, up over 20, and Mag 7 up 2. And then finally, and you made this point as well, there's $7 trillion still on the sidelines. Hence, when we do get a dip, so far anyway, money has come in to buy the dip. So plenty to worry about, but a lot of good
next
stuff.
Month. That may be the month of September. We've had that prediction put out there, and we've seen that play out in years past. Buying opportunity, to your point. Don, the president is maintaining his stance against Canada. I want to get your thoughts on this. The U.S. is now going to put this 50% tariff on all cars and steel coming in. This starts January 2027. He wrote Canada will be treated like a state no longer. We don't need Canada, they need us. Canadian Prime Minister Mark Carney is vowing to fight back with retaliatory tariffs. Your thoughts on all of this? Because this is an economic story, in particular for northern states. I think Michigan in particular.
Well, Canada has been a very important partner in our automobile industry, very important to Michigan, very important to the U.S., and the president wants to get a better deal for us. I think that imposing some limitations and imposing the threat of tariffs will put him in a position to negotiate a better deal. He's pushed the deadline down to January 2027, which gives him an opportunity to negotiate. And I'm hopeful that that's what he's doing, negotiating a better deal for the U.S. It seems like his style, which is to be aggressive and then to work a compromise out, but using the strength and the power of the United States to let them know we mean business. So I'm hopeful that he'll work something out that'll be more plausible.
The art of the deal? Is that what you're talking about?
Exactly.
Yeah.
Yes. Well, he got it from our industry, the real estate industry. He was a master at that, and he's doing a great job. But
well, and I was going to say, you know President Trump for years because of being in the New York City real estate market for decades, as you have.
Yes.
So you've got a good window, I think.
I have a great window, and I think that what he's done for the real estate business, he was the original brander of commercial real estate. No one ever branded apartments or office buildings. He did that. He was an innovator, believed in New York when no one did, and so look, he's fighting for our country, and it's an example of why we do need business people running our country.
There you go. Keith, it's great to see you as always.
Always good to be here.
Keith
Thank
Banks. All right, I like the bullish tone. I appreciate that.